Hi, everyone, and welcome to this week's installment of MISH'S Market Minute. I am your host, Ms. Schneider, and again, like to thank StockCharts TV for giving me this opportunity week after week to come to you with generally a deep dive of whatever subject seems to be hot. And right now, we would be remiss to say that inflation, which of course, those of you who have been listening to me for a long time know I've been talking about it for like over a year now, would say, though, at this point has become so mainstream, it's on the lips of pretty much everyone, including Jerome Powell. So what I thought we would do is look a little bit different. There's an Inflation Beneficiaries ETF that has actually been put out by the Horizon Kinetics Inflation Beneficiaries. And the actual ETF symbol is INFL. And this is an asset management company. And so what they have and what I've done is I've taken some of their top symbols to look at because it might give us some new ideas for inflation plays, excuse me. Plus, of course, I've added a few of my own. So let's get going. Here's just quickly some of the symbols I'm going to cover. And of course, I always like to say that I haven't looked up all these symbols on StockCharts. So if we run into a snafu, we'll just move forward. All right, let's go. So the first one is actually the ETF of the company itself, the inflation beneficiaries, and obviously they may have to do a better job of picking their beneficiaries because right now what you can see here is we don't have any real motion indicator because it's a new ETF, which means we don't have enough information. However, in terms of the leadership, you can see that it is amazingly slowing leadership against the benchmark, which of course is not too surprising considering we're getting a little bit of a sell-off here in the market, or I should say more than a little bit. On the flip side, we are under the 50-day moving average. And if we just look at the Bollinger Bands here in terms of the price, we did have a mean reversion trade here, but it didn't go very far, which is why you have to be nimble in these sort of markets. However, it does seem to me that if we break down under this 29.17, either we don't have to get under the 28.98, or if we do get under the 28.98 and come back through, this might be something at least to gauge that some of their beneficiaries are doing better. So let's take a look at some of what of them are. Their top weighted one actually is Charles River Labs. Now, that's not working out too good either. But again, I always like to look at the potential and the possibilities, also give you a good lesson on what I've been talking to you a lot about, which are these sort of mean reversions using the real motion indicator and the Bollinger Bands on the actual price charts, which are what you see here. This is a Bollinger Band, this is a Bollinger Band, this is a mid Bollinger Band, and of course the blue here is the 50-day moving average. So if we take a look at this, it had an overbought situation where it crossed over the Bollinger Band and the next day actually broke down. It also had a new 60+ day high breakdown. That's the kind of thing you want to look for if you're somebody who likes to go short, why these indicators are so good for that. Now, we are under the 50. We're touching down on the bottom Bollinger Band. We broke out above it the day before with an inside day, but we took out that top and then we're back down. So it's choppy. So at this point now, if we're looking at real motion, we're actually really underneath the Bollinger Band here. Remember, the Bollinger Band on real motion is the dotted line. So we would have to see the price get back up, maybe say over 430. And at the same time, these dots, red dots, clear back over the Bollinger Band. So I wouldn't dismiss this altogether. It's had a nice run. However, I wouldn't touch it on the long side, certainly, unless those things came to pass. And you could see that from the high here, which is at 460, all the way down to where it tanked to, which was 412, that's a nice move to the downside. So this is a mover. The next one is TPL, Texas Pacific Land Trust. So look at that. I mean, their inflation hedges so far don't seem to be all that impressive. And we're going to get to cover some of mine, which are going to look a whole lot better. But right now, what we can see here is that we've broken down under the 200. We had our sort of mean reversion trade here, which gave us a little bit of a pop, not much. The moving average turned out to be resistance here at the 50. Then we broke down after an inside day a couple of days ago when the market started to come off, and here we are. So with this one, we have not quite broken down under the Bollinger Band yet on the real motion. We like to see this break and come back through. At the same time, price breaks through the Bollinger Band and comes back through. So if you were interested in any kind of exploration when it comes to energy, which we know right now is not federal policy, then if that changed at all, you would actually see it reflected probably in this particular chart right here. So the next one, also interesting, is the Intercontinental Exchange Group. Now this is actually almost more picture perfect in terms of the Bollinger Bands. Now we've touched down on the Bollinger Band here, but we haven't broken below. We touched down, but we didn't close below. So we want to see a close below here, a close below here, and then it come back through. And if we just look at price right now, 115 as your 200-day moving average is really a very interesting price. So you can keep your eye on that. Now, it doesn't necessarily have to work out that way, but this is in the financial group. So they're basically, what they're saying right now is that land, energy, and financials could be a hedge against inflation. And the reason why I think they're looking at that is because they're assuming that the rates will actually continue to go up. We can't make that assumption right now. At this point now, the TLTs, which if I have time, I'll show you at the end, are really hanging on for dear life onto major support. So it remains to be seen. So in terms of inflation hedges, this has already come off because of probably those rates. But if the rates go down and these things turn around, you have some new instruments to look at. Next one is FNV, which is Franco Nevada gold mining. Now, not surprising here to see that we had real motion divergence, mean reversion indicator here, although this did not break the Bollinger Band, it did on this day, closed above it. Not the cleanest, but nonetheless, it kind of reflects what we're seeing today as a pop in both gold and in the gold miners. And that's a very interesting situation to be in right now, because basically it's telling you that it's possible that they've been well overdone to the downside. We'll be looking at the gold chart later on as we go through these. With this one particularly right now, since you had an inside day here yesterday, you would have to really close here above 131. If you wanted to take a shot, you could get in above 131 on a closing basis and risk down to under 126.64. Next one is Viper Energy. So you can see why some of them in the energy field are working out great, like this one, while others are not. So this is interesting because actually what we're seeing right here now is not quite overbought. Although if it breaks down under this Bollinger Band here, while it's breaking down under the Bollinger here in price, it's telling you it's overbought. So I would not touch this at this point unless we hold in both places and close back above that 22.21. We would have to close above there like we did yesterday, or even better, with the inside day forming, we'd really have to close over 22.51. And then you could see another leg up in that as well. Next one is Archer-Daniels-Midland. Now this is consumer staples food products. Now consumer staples are definitely a place where you go in inflationary times, and I believe I've actually covered that in a past video. So let's see if this would be a good one to look at. First of all, we're under the 50-day moving average in the real motion. Here was your situation where you got the divergence in the momentum, but not in the price. So we actually haven't had any kind of divergence there or mean reversion, but that doesn't mean that's the only way we like to trade. It's just a way to trade. Here you could say it worked really well because we broke out of the Bollinger Band, got overbought, and immediately came off the next day, but we never quite got to or through the overbought conditions here in terms of the Bollinger Band. So if you're looking strictly for clean plays, this isn't it. However, what we can say is it's above the 50 at $60.05. And if we can get a close here, I'd say to be conservative, probably use this high here at 61.15 ADM. could be an interesting play. In fact, of all the ones that I've seen so far, that's probably the most interesting one to me right now. Okay, now let's go to the next one, WFG. West Fraser Timber Company. Now this one too, what is it looking like? A little overbought. We're breaking down on the top Bollinger Band and we're breaking down on the price Bollinger Band. So very simply, this would have to go back up and this would have to clear out these highs. So this would have to clear out 85.42. If it does, you could take a tight risk to under, let's say 82. But if it doesn't, I would stand aside and see what happens. But you can see we're close to overbought. Now, overbought conditions can be worked out through price or through time. And now that we're sort of going sideways, I would say that that simple signal over that 85.42 wouldn't be the worst thing in the world to follow either. WPM, Wheaton Precious Metals. So here we go. These things have been gotten killed, but we never had a very clean mean reversion because we never broke down into the Bollinger Band and back through it. Same thing here with the momentum. So I would not touch this one, but if we do go down further, that could be interesting. Or what's another scenario we like to look at, which is a new 60+ day low. This one's an inside day, so that means if we get a close over 38.31, you could actually trade it for a different reason, not a mean reversion trade, but a reversal trade. Okay, so you can see I talk about these same things week in and week out. So hopefully some of you are starting to really learn this stuff. Now here we had a potential mean reversion on the momentum, but not on the price. We did back here, but that played itself out already. So now we have to see what happens here. So at this point, I would almost prefer for this to break down once again down to 52.50 and then come back through. Now this is real estate development. It's very interesting that Brookfield Asset Management would actually be one of the inflation protection indicators, but nonetheless, here it is. And I don't think this is ready to do anything at this time. Next one is MMC. So that's Marsh McLennan, that's financial insurance brokers. Look how that's breaking down. So again, maybe now that you're below the Bollinger Band in price and you're below the Bollinger Band in real motion, if that comes back through and price comes back through, maybe through 155, you would actually have an interesting opportunity there. So, you know, you can write down these levels and wait for them and put them on your radar screen. MN, this is Brigham Minerals, general mining. Now, this is in a different situation. Again, we had actually a mean reversion on price, but not on the Bollinger Band here, because you can see the top Bollinger Band is well above here. So we have not even gotten anywhere near overbought conditions. So what we have here right now is just a little bit of a test here. Maybe 1881, our 50-day moving average will hold up. What we would like to see too is, forget about mean reversion, we would just like to see this. You see how it cleared the 50-day moving average for the 1 day and then came off. We'd like to see this get back up to that 50-day moving average at the same time that the price might be moving up over 20. But this isn't a bad one either. So I'm going to write this one down. Okay, next one here is CBRE, which is also in the real estate services, looking a little bit better. Again, found resistance of the Bollinger Band, but it's not a mean reversion trade because it never got overbought. So this is, again, probably somewhat of a no-brainer in that if it clears, let's call round numbers 100, this could go up. On the flip side, with momentum going down here, I would say more likely we might see a move closer down to somewhere around 94, 95. So this is right smack dab in the middle. So over 100, good. Otherwise, stand aside and see where it goes to the downside. This is a one I used to trade a long time ago. This is Weyerhaeuser. And this too, you can see exactly kind of what I was just talking about. It got to the price here. This is a perfect mean reversion trade overbought. You were over the Bollinger Bands here, you were over the Bollinger Band here, didn't close over it, then it failed. Now you're coming off, so I wouldn't be touching it here. However, you could take a look to see what happens if we can get down closer to where the 50 just crossed over the 200. So you had a golden cross here. So you'd like to see maybe some kind of movement closer to 35. At the same time, you want to see this 50-day moving average on real motion hold up. Next one is CNS. Cohen and Steers, another financial asset management. Now look at that. You're breaking down under the Bollinger here. You did. Now you're back up. But we haven't quite cleared it here in real motion. So I like to see the match. So I'd keep an eye on this because it looks like 82.50 would be not only a new 60-plus day low, but if we can gain a little bit of momentum here and clear back up a little higher, you could either wait for this to clear the 50-day moving average or get in a little bit based on that confirmation of real motion. But I like this. This looks good. Financial asset managers, Cohen and Steers. So another one to write down. Okay, now next one is Joe. Also real estate development. And now I made this a little too. Let me fix this. Okay. With Joe, we have a situation now. Again, let's take a look at the real motion in this. We had an indicator where this went under the Bollinger Band, touched it, but never broke down under it like it did here. So this was a cleaner one and you got a nice rally. Now this is coming off, but it's not showing you as clean a move. So we probably would say with this one, the potential right now is for this to go a little bit lower. It's in a bearish phase, and that makes sense with the interest rates. However, if it comes down closer to 40 with this huge sideways action, you might have an opportunity there. Next one is OR. And again, this is gold. No mean reversion here. We did here. No, not quite. It wasn't clean. We did have it in price, but we didn't have it here. So this to me doesn't look like a very interesting play, but nonetheless, another good one to keep an eye on in terms of the whole gold and gold mining space. Okay, now my picks, or at least my ones I think you should look at. So gold was almost a perfect mean reversion trade. We had it in the momentum, of course, but we didn't break down here on the price. However, this last peak low held, the one that we had from this time here back in August. So now what you can see on this chart is a 6-month calendar range low, which comes in at 165.50. So that's about right here. So right now, what this is telling me in gold is that it's an oversold bounce. And as such, this is to be expected. However, we could be doing a double bottom, or it could just be that. So that's why I would like to see, really, to be absolutely the most conservative, a close over 166. And then that would kind of convince me that this was just more than a bounce. So 166 is the number that we're waiting for at this point. And now if we take a look at DBA, DBA already had its signal. See, here was the perfect mean reversion trade. See where my cursor is? It broke down under the price and came through. It broke down under the Bollinger Band and came through. It did it again, so you might have gotten stopped out. The second time it did it, though, didn't quite get under the Bollinger Band, but nonetheless, right now, here we are at the top of the Bollinger Band and above the 50-day moving average. So if you're not already in the agriculturals, this is definitely one for you to keep an eye on, because if we can get through 1920, especially on a closing basis, let's call it 1920 to 1922, you have an opportunity to buy it and use a risk around under that 50-day moving average. So it's not too late with DBA if you've missed the first leg. That would be something else to be keeping an eye on. And then DBC, which is a commodity index as well, more heavily weighted in oil and in metals, this actually got overbought. You could see it went above the Bollinger Band and back below, but only in price, not in momentum. So we're sitting here on the 50. So with this one right now on DBC, I would say with the new 60-plus day high, you probably, to be safe, want to see a close over 2036, and that would be a good signal to go in. Now, one of the biggest missing pieces of the inflation narrative had been the oil market, because it really wasn't doing all that much. So we're looking at USO here, Again, we've not gotten overbought. We had a good mean reversion trade, perfect one down here. But now we want to see what happens if it can get closer to the Bollinger Bands here on momentum, but also it would have to clear here on the price, which means really we'd have to see it close over 53.35 to see whether or not this has got more upside. More importantly, if this thing continues to go up, with the oil situation because of the supply chain being an issue, then you can pretty much bank that we're going to be seeing a lot more trouble coming from the inflation side of life. And 2 more to go. Cane, which is sugar, is giving you another opportunity to get into this. And we are probably going to be looking at getting into it because the underlying, which is the cash sugar right now, is trading over 20 cents. And that was our breakout area. You could easily buy this and then have a risk, I would say, probably somewhere around under 924. So that's not a bad risk reward factor if this thing is going to have more. And then finally, is coffee. Now the underlying with coffee right now is trading at 194.60. And you can see that this hit the Bollinger Band and came off. Hasn't quite done that here yet and nowhere near in momentum. It did it here. And of course that got very overbought. So we're not overbought at all. So what I'd like to see is if you look at the coffee chart, which I can't do here, this would be a close over 55 or coffee futures in terms of the continuous contract, a close over 200. So that gives you a whole bunch of ideas here to be keeping an eye on. Of course, you can look at some of the individual grains if you want. And also I'd be keeping my eye on the dollar as part of that equation too. It's made a huge run up, might have been kind of a blow off rally. That's certainly something that we can consider. In fact, last thing we'll look at is UUP. Here's your blow off rally, but we have not broken down yet under that Bollinger Band on the price or on the momentum. So probably the best thing I've done is look at this today, because if this breaks down into the Bollinger Band here and here, not only do we have oversold condition, but most likely it would mean that some of these metals in particular, but all of the commodities are going to continue to go up. Okay, that's it for now. You all have a great afternoon. Thank you so much, and I'll see you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.